Hey traders, Raghee here, and in this recap video, which I am calling Who Knew, right? Little did we know that this would be the most dramatic day in Dow history. And before I get caught up in the hyperbole of it all, before you get caught up in the hyperbole of it all, which really, considering it is the most dramatic, it's maybe not as much hyperbole, but do notice that we have only made a correction of the overall uptrend in the Dow, the NASDAQ, and the S&P. In fact, the NASDAQ and the S&P, well, actually, the NASDAQ has only made a 21 EMA correction, while the Dow and the S&P each hit their conservative level. And I think this is so important because you can get caught up in the giant down candle and think the sky is falling, and yet the uptrend that has been intact with this much of a sell-off has only corrected the trend. Now, I think this is also worthwhile mentioning too. If you go back to 2007, 2008, the kind of drop we saw back then, because I think a lot of people fancy using 07 or even 87 as examples. And there's a huge difference, because the correction that we saw here is after the market has been accelerating away from a conservative correction. This market has been in acceleration mode, hence all the propulsion dots and whatnot. So correcting from these all-time highs is just a correction. It's not a crash. It's a retracement, not a reversal. Not on the weekly chart anyway. On the daily, however, we do have dramatic reversals. Now, this wasn't without some sort of warning, but not warning for this, right? And certainly not warning for this. But what was the warning? Yes, last week we had two 3 PMR moves, two days that had price movement range that equal almost three daily price movement ranges. So it's a 3x move, 3x the normal daily price movement. And then we also had that blue grab candle on Friday, that big sell-off that we thought was so dramatic. Wow, it's all relative, isn't it? So the blue tells us that we're not seeing as much bullishness, but it was just a correction. Quite frankly, today we flat out reversed the overall trend, which means in 100-year-old Dow theory philosophy, this is a transition from an up to a sideways, now choppy market. I would call this distribution, right? So now what? Well, when I see movement like this, the smartest thing we can do is transition, or what I say retreat, to shorter term time frames. And you know, one of the things I had mentioned hours before the sell-off, and I'm not saying we knew this sell-off was coming. I actually cannot stand when people do that. That is not what I'm saying. But one of the things we had talked about going into the rest of the week was when we wake up to a pre-8 a.m. or by 8 a.m. Eastern, where the futures have sold off by their, what we call the rare air or 32% range calculation. When we wake up to a session like that, then we know we should really start to carry with that a certain bearish bias in terms of price movement range. In other words, if I think that we've already moved 32%, the projected low, the rare air, but we do only 1 out of 3 times, if we're already at those levels by 8 a.m. Eastern, I really should look for opportunities to start selling on short-term time frames. Now, today was the first red grab candle, so we were making that transition going into tomorrow because we knew it was time to start dealing with the price action and the kind of psychology that will often accompany a more extreme price movement range first thing in the morning. And then that's why I say it's kind of funny. We said this afternoon, hey, let's start getting ready for this. It's time. And then not even a few hours later, the market proved how right we were. But it was too soon. It happened too quick. You know, we were making the transition for tomorrow. It actually happened today. Who knew? So again, when you do your price movement range calculations and you see that by 8 a.m., we're at about, we're beyond the 68% projected lows, that we're now into the 32% At that point, I would highly recommend, where we are within the transition of this trend, I would start looking at 60-minute time frames or less and just follow the trend. And we'll talk a lot more about this in the chat room. And by the way, today was the first day of our full chat room, 8 to 4, and what a day it was. So, gosh, what a way to kick off our very first full day of Simpler Futures. But if you're with us, I was at a loss for words. I still am. What a historic thing. I was glad we could share it together. And this is the game plan moving forward.